Hi, this is Stephen here from Share Navigator, and I just want to explain to you about the SPY combination trade that we're about to close down. So I think first things first, I want to go back to the original idea in the trade. Let's look at a chart on SPY. We've seen SPY getting extended here. We wanted to basically put on a trade that would benefit from the S&P 500 pulling back in a short period of time. It pulled back a bit for us, and in hindsight, probably last Friday should have closed out this trade. We would have made more profit, but we didn't. Um, and what we did was we bought what we call the 660 put, and we sold the 650 put for the October 3rd expiry, which was a bear put spread. And then we financed that by selling the October 17th 620 put. So uh, right now, if you actually looked at the overall trade, it's shown down here that we're down $33. But I'm actually going to show you now, and this is the real beauty of this trade. And I just want to emphasize that whilst there's no such thing as a free lunch in investing or trading the market, this one gave you a statistical probability and a statistical chance of not losing any money and taking a bearish bet. So it's much better, in my opinion, than shorting the market outright. And I'm going to show you how we're going to turn this around into a profit. So what we're going to do today, right now, is close down the bear put side. But first of all, I just want to show you the cost of this trade when we initially put it on. You can see that it was $99 a contract. So we spent $99 a contract. What we're going to do now is going to close down the 660 and the 650 put that expires this Friday, because we're not going to wait any longer for this. So you can see just at the moment here, we'd be taking in 193 and we'd be forking out 50 cents. So we'd be taking in 143. Overall, if you think about it, then if we spent 99 originally and we're taking in $143, we're going to be up circa $40, let's call it, to keep the numbers even. But we're going to have this short put left open then. So then that's the risk. In other words, we'll have just one insurance policy open on the market for the SPY to fall roughly, I think, about 7 or 8% from where it is now in the next 2 weeks. And my school of thought on that, before we go closing the trade down and showing you how to do it, is that if the market did this, I just want to show you something. If the market actually fell down to 620, I would want to buy it there. So I'm happy to leave that part of the trade open. If you weren't, let's say for argument's sake, things started going pear-shaped in the market and you started getting anxious, you could roll out that 620 put out and down. And the reason I just want to emphasize that I want to leave it on is we've still got $82 of time value left in it. So we want that to erode to zero. So if we get to October the 17th and SPY is above 620, that will be zero on October the 17th. And that's to our benefit because we don't own it. So we benefit from time decay there. So this, again, just to reiterate, before we close it down, I just want to close this trade down now because, Friday's fast approaching. We would need the market to fall down quite a bit here in order to start making more money on this. I'm not prepared to wait any longer. I can take in here about $140 today, right now. I forked out 99 originally on the trade. Got to make a net profit of $40 per contract. So even though it's shown a loss here of $44 at the moment, as long as SPY stays above 620 by October the 17th, we'll actually have made $40 a contract. And statistically speaking, we have a 99% chance of that happening. So that's the reason why I love this trade. So it's really important you pay close attention now as to how to close this down. If it's showing like this on your screen where it's a combination trade and they're not three separate trades as such, you close each leg down as follows. So we're going to click on the 650 put. And to me, the simplest way of doing it is just click on that. And on the right-hand side here, you're going to see three dots. Don't click buy or sell. See these three dots here, click on close. And the reason I say that to you is some of you are going to have more than a quantity of one here. The default quantity will be one. So let's say you have three contracts open, it will automatically populate with three, because sometimes you forget to change the quantity. I'm just going to go market price just to close it down, get it out of the way. Click on buy order. And that's done. So now that part of the trade is gone. So we go back to our combo trade. You can see there now, you will see that this is gone. We'll just have to refresh the screen now in a second. There you go. So you can see the 650 put is gone. So now I'm going to close the 660 put. Going to do the exact same thing. I'm going to go to the right hand side. Now I'm going to click on close. I can do it from that window now because it's no longer part of the combo. And this is a sell order because we own the 660 put, and that's done. So you can see there now, we're down to, we don't have the bear put spread on any longer. All we've got left here is the 620 short put that's left open. So we want that now to just erode and go to zero. Personally, myself, I would love to actually take assignment to that. And I'm going to do a separate video on RSI and technical analysis on SPY as to why I would actually like it to take assignment down there if SPY did fall there. So this is just a quick video explaining you how to close down this particular trade. Just to show you what we closed it down for, we go into trade and we look at orders and trades, and I'll be populating our spreadsheet later on. So you can see we closed down the 660 put, we actually took in 170, and closing down the 650 side, we paid out 46. So that actually yielded about 130 in premium. We paid 99, so we're going to make about $30 per share in this particular trade. Okay, so that's the net impact, if you like, of actually putting on this particular SPY trade and trying to close it down, and really turning, you know, kind of giving ourselves a chance to make a few bob if SPY actually did fall, and then at the same time not losing any money if it doesn't go our way. That's exactly what happened here. If you have any questions, please reach out. Thanks, bye for now.